Okay, so the question came out, how do you maximize the move in a stock like WSM when it's in your morning watch list, or your morning trades? So we said on this one here, I wrote WSM trades to 69.40, up 680, now coiling near the apex at 67.08. Day trade target 69.50 and 72. Support 66. And then I talked about earnings. So from a day trading point of view, you can see that it came down here. This was the support at 66, traded sideways. And then, so when it broke out this morning above this level here, that would have been a good entry at 68. But it did spike quite quickly. So let's say you missed that. And it did trade up to the first target of 69.50. And so or you did catch it, but you want to sell some at your first target. So you do sell some. But then it pulls back. Now this is what I call the first pullback entry opportunity. Stock spikes up, comes back down just as quickly. This is a 5-minute chart now. This is a 5-minute time period and a 5-minute chart. So 15 EMA moving up strongly, 5 holding good support for the stock once it gets going. They're both moving up in parallel. Very, very strong chart. So, but what we're going to look at is the first pullback entry opportunity. And this is it right here. So we've got this sharp pullback. It makes another red candle, and this is what I call a spinning top. This is a candle of indecision. It doesn't know where it wants to go. But after you've had a big sell-off like this and you get a candle of indecision, that generally means that it's going to go the other way. It's going to turn and go the other way. That's quite often what happens. You can see here the same thing. We had a couple of moves up, and then you get this candle of indecision, and the next candle is red. But here, early in the game, you got this big pullback, and now you've got this candle of indecision. The bulls and the bears are fighting each other. They don't know which way to go, but then we get a green candle. This is a very bullish, this is a good start for me. So now this is the first green candle. What I'm looking for next is the next green candle to make a new high. And so the high on this one was 68.57. So if this candle turns green over 68.57, I'm going to go long. And it also happens to be the double top here. So this is the area right here. Come on, I know you can do it. And so you go long here. And let's say you get in at, 68.75. Now it's trending up. We don't got anything. We do have areas where this is touched down. Come on. Here and here. So early in the morning, this is the channel that this is the only thing I can draw is this, right? Because all this is future event, hasn't occurred yet. And then I just draw a parallel line to it off of this high, like this. But as the chart develops, I'm going to move that down into this area here. And as it develops, I just keep drawing this channel line up like this. So we're long the stock at 68.50. It's in this uptrending channel. The 15 EMA is moving up. 5 is apart and holding support. Very, very strong chart. This is absolutely low risk, low stress trade. Just continues to trend up very nicely. We get up into this area here, and it does make this double top and rolls over. Now it does break through this channel, and it does spike down quite a bit. Most likely, if I had been in this trade, I would have been selling it on the way up here because my target was 72 and it trades up to a high of 71.50. So, I've sold 3/4 of my position and it rolls over. I would be saying, okay, here's my stop if it breaks below this channel line. And that comes in at 70.5. And sure enough, it does spike down. I probably would have been stopped out on this because you don't know how far it's going to go, but it does return itself. and then it starts to develop a new channel line that's more sustainable, like this. And that looks like that. So you get stopped out, but it does come back and consolidates and then starts to go on. Now, so maybe you look at trading this on a breakout of this level here. And if you do, you get back into the trade. You don't know where the top of the channel is going to be, but it does get up in here. It touches it a couple of times. That gives you an opportunity to enter it or to sell it. Give you the channel line. Consolidates all day long in here, and then breaks out. So when it was trading in this channel, you just stay in this one, breaks out to the top of it. Now you've got, you stay and still in this uptrending channel, and it broke out of this consolidation area. Now it's, now it's up, and so now we're looking at 73.5 as our target. So the answer to the question is, how do we maximize this trade? Well, we would have maximized it when it was in this channel here. It almost hit our target of 72. We would have got off 3/4 of position. When it rolled over, we probably would have got stopped out. But we do have an opportunity to get back into it, and then stay in this new trending channel, because it was a pullback, but it didn't pull back that far. Now this is probably a third pullback, and it's not as reliable as the first or the second. But so I wouldn't be trading this on a green candle, first pullback, a green candle type to make a new high type scenario. This one you could. It didn't really make it. It didn't make it until it made this one here. You could have bought that on the breakout, the second pullback. But this first pullback entry opportunity, absolutely classic setup pattern for me right here. Puts you into the trade, trades up to the top. You might have got stopped out. You might have stayed in. You might have seen that it was just a spike down and came back. If you did, you stayed in this trade and it started to go, you would change your channel lines here and here, and you'd still be in this trade. This is not a trade that you need to be out of. If it breaks below this area here, now, it has hit our target and almost traded as high as 73. It's traded as high as 72.54. But you're still in this trade. Not all of your position. You've sold it. You've pieced it out. But you should still have some left. If you didn't get stopped out here on a pullback and the break of the trend line, you might have just sold half your position and kept some more for prosperity and stayed in the trade, and now it continues to go. That's how you make the big money in these things. Is you can't be thinking of just trading it for. If you want to make the big money in these moves, you have to be prepared to give some profits back. But let's just say that, if you did get stopped out here, and you traded up as 71, and now it's traded up to 72.5. So you missed $1 by getting knocked out of this trade. But what if this thing had kept rolling over and heading down? You did catch what they call the meat of the move in this one. If you didn't get stopped out and you're continuing in this trade, and it got back up to this area here, and you sold it because it was the double top, you would have sold maybe a bit, but didn't exit, or you sold it here because you think, oh well, I'm bored with this trade, I'm staying in it, I'm getting out of it, and it adds on another $1 from this area here. Once these get into these trends, stay with it, let them run, because that's how you're going to make the big money. You don't make it by trading it for 5, 10, 15, 20 cents. Now, if the chart tells you to trade it for 10 or 15 or 20 cents, that's what you do. But if the chart is telling you to stay in the trade, stay in the damn trade, don't get out of it. That's my rant.